Just to warm up, tell a little bit about yourself and what do you do and what did you done. Richard, we'll start with you, please. Or you want us?
I can go. We'll see whether my voice lasts. Hi everybody. Great to be down here in Tel Aviv. My name's Richard Muirhead. I am a founding partner at Fabric Ventures, and we're, I guess my first confession is I'm definitely a startup addict. Been kind of in the game for 25 years now, 15 years building my own ones, and now 10 years trying to do my best at backing other people building theirs. Fabric has a vision that this next wave of computing is going to bring us new services that are incredibly intimately interwoven in our everyday lives, and therefore there's various inventions that are being put together now that are pretty crucial to make that something that we like rather than something that we fear. And so I think it's extremely exciting, but there's work to be done, and hopefully we're going to talk more about that.
I'm Howard Morgan. I'm the chairman of B Capital Group. I've been a venture capitalist now for 37 years after a career as a professor of computer science. The big change is I went from First Round Capital, which I started in 2004, which was doing lots of consumer startups, to B Capital, which is a global firm based in Singapore and California. And one of the things we see happening is not only is the consumer industry really taken over by software, but business to business is the next big frontier. And we think and are investing in lots of software and technologies that are going to revolutionize big industrial businesses, which are, after all, 70% of the economy. A consumer tends to be about 30%. Certainly media is only 1%. And that has led to Facebook and Google and so on. We think there's a lot of interesting opportunities in the enterprise and B2B space for industrials, transportation, and especially in healthcare and finance.
Hi, my name is Shaukat Shamim. I'm an entrepreneur. I call it I'm an accidental entrepreneur. I have the fortune to create a few companies with some of the most talented people in the world, 7 to be exact. I was also very fortunate to be in some of the companies which I thought at that time gonna die for sure, but ended up becoming pretty big. I was in Yahoo from the very early days, and there I had my hands on creating Yahoo Messenger, which was at one point we were the largest messaging platform. Currently I'm just running 2 companies. They are both based in, one is in video, another one in cancer research stuff. But very fortunate to be here. And I also wanted to thank many people who have they woke up in early morning to be here. And thanks for all the friends who are here to support. We are indebted to you. Thank you.
So I like TV. My name is Ifat Oron. I'm running what we've founded 5 years ago within Lumi Group, is the technology banking arm. We are trying to service technology companies from seed stage all the way to when they become large corporates, funds, incubators. We're currently working with 5,000 of them in Israel, New York, Palo Alto, and London, and we hope to grow much more. Thanks.
Good morning, everyone. I'm Aleix Valls. I'm managing partner of H-Farm in Barcelona. We are mainly helping corporates with the digital strategy to align investments and what nowadays is the digital transformation of these big corporations, something that is more like a myth than a reality nowadays for a lot of them, and helping them to that. Previously, I was founder of 4 years from now, that it was an event that was one of the fastest events in the tech industry, going from 2,000 to more than 20,000 people in less than 4 years, after that acquired by GSMA. And happy to be here with you.
Great. So good morning. Good morning again. Thank you all for coming as so early in the this morning, but it's good to be early because it's not so hot. We'll start very macro and then we'll go micro. There are 3 or 4, as Ifat also mentioned on a lecture before, huge changes in the world right now. We can talk about uncertainty, but we have the Brexit, we have the taxes changing all over the world, we have the trade war between China and the US. How this huge phenomena, how this huge tectonic change influencing VC investment and the way startup need to look at the business today. Howard, maybe we'll start with you. You have an overview of a lot of years in this industry.
Well, I think one thing, when you've been in this industry as long as I have, you realize you have to invest every year because things change every year. And you want to have a portfolio that's sort of averaged over the ups and downs of the economy. The best companies usually are started in the worst times. When people, they can't get another job, so they start something of their own. And then as the economy gets better, it grows. I think that China is a special case because with B Capital, we're investing heavily in Southeast Asia, but not in China, because it's a very difficult place for outsiders to succeed. And it's a monster market, so everybody looks at it and with envy, but to actually be in there, you have to have very good local partners, and you have to be able to work with them. I think the tariffs are definitely going to start hurting them, and I don't know how long they'll last. Obviously, there's a lot of posturing in this tariffs to try to get from China what in some sense the US and other countries should have gotten years ago, which is protection of intellectual property, because there's no question that the intellectual
Good morning, Adam, everybody.
Yes.
Welcome.
It was trade wars. It was a trade wars. They got me delayed.
It was a car wars.
The car wars,
in
yes.
Israel, there's a war in the in the roads every morning.
Every morning, yes. I'm familiar with it from Los Angeles as well, and even from New York. So in any case, I think the global economy issues, and some of them Efrat talked about, are important. I mean, with things like security, Israel is obviously in cyber is very deep, and you understand that some of the things that Huawei and ZTE and those people were doing are something that's very dangerous for the world long term. So that has some effect on investing in China. But outside of China, I think we invest every year because transformation in healthcare is coming. The whole world needs it. Transformation in the financial systems is coming. We're seeing more and more of that. And transformation in big industry is happening, particularly in agriculture and in logistics. So it's a great time to invest, but then I always think it's a great time to invest in the private sector. If you ask me how the stock market's going to do, I have no idea.
Ifat, maybe your 2 cents on the subject.
I think that I'll take a very specific angle, which is what has happened in America with CFIUS. There are issues about having Chinese investors at your company. I don't know if we're seeing the end of it, meaning I tend to be an optimistic person and think that, going a little bit overshooting will correct itself. But what I'm feeling, and I know that startups and not less so funds are thinking few times before they take commitments from Chinese entities because they're not certain what is that going to create, down the road. Are they going to be able to be acquired provided that they have Chinese investors, or are they going to be able to acquire? It is a big issue, and it is a very big issue for those of you who are not Israelis. China has become very, very active in Israel. I think in the last 10 years, we're seeing many, or I would even say most of the large Chinese conglomerates that are technology-oriented are here in some form or fashion. They either invest, or they collaborate, or they buy technology, or they operate funds, or they operate R&D centers. Some are known, some are not known, and they're very bullish on Israel. And this whole new theme of, U.S. and China not being friends anymore created a little bit of an issue for the Israeli market.
So do you see Chinese investment checking the list of your ownership, of your investors, saying, well, you have too many American investors, I'm not investing here?
I think that companies have to, well, not have to, but are trying to pick sides and stick to that side. Either you're going to want to sell in America, be acquired in America, go public in America, and then you're going to try to reduce a little bit exposure to the Chinese market. Or if you happen to do something that the potential market is huge in China, then you go all in and you do China. But I start to see fragmentation and hesitance about, what is my cap table looking like? Should I open an office there or not? Is it going to contaminate me or not? All kinds of things that we haven't seen 2 years ago. We had Jack Ma coming here every year and doing business. I mean, best ally of Israel, one of the best allies of Israel. It's changing.
Richard, you want to comment?
I mean, look, I want to kind of keep away from commenting too much on things like Brexit. I feel a little bit like it's schoolboys continuing their debating society activity from university and not focusing on what is most important for different nations. And it saddens me a little bit to hear about that fragmentation and schism you were just referring to. I've started to notice the same thing. China very active in countries where that's not so much of an issue. I just come down from Moscow. That's certainly the case there, but they're very active in London as well. I'd like to think we can rise above that, possibly. I'm not sure whether it's awfully justified, frankly, the division that has been created between the US and China. And I did note that China, for the first time in about a decade, has become a net disposer of assets within the US within the last year. Whether that's a kind of a pointed form of retaliation, we may see it flip back again. Who knows? For me, what I'm more interested in is that we believe there's a kind of new wave of computing happening that I referred to earlier. And if you look back, the first wave, I think most of us were present. Very few people were actually confident enough to even do e-commerce, and now we have Amazon. If you look back, very few people at the start of Web 2 thought that they would want to reveal their identities online, and now we have Facebook. And we're in this new phase now where I think in this new software architecture we can shift from a situation where Google had to claim that it wouldn't be evil to a situation where actually it's impossible to be evil. You cannot be evil. And therefore we're all going to be much more confident to share our personal data. And what's that going to mean? That's going to mean that we're going to do everything from exist in virtual worlds and earn our livings in virtual worlds to obviously drive around and give up all of our data so that we can park wherever we want and get insured in real time, through to giving up all our data from the moment we're born so that we can be diagnosed and that we can contribute back to the accelerated pace of drug discovery. And it's those kinds of services that I think are pretty exciting. And I think they'll absolutely transform B2B supply chains. We're already starting to see that in anything from kind of, just plain vanilla supply finance through to kind of, commodities and so forth. And so I'm hoping that technology, at least in some part, can be the answer to this squabbling between nation states.
But I want to go, thank you, Richard. I want to go another step with what Ifat was talking about. Are we going from a world that is a global, many years after the Cold War, like if I'm a startup or I'm an investor, I see a huge world with opportunities, or as a startup, as an investor, I need to choose a side. I need to choose a side. If I'm talking with friends that have working and they have like a small factory in China and the office is in San Francisco, and now they cannot work anymore as they worked before because tax issue and they need to move. So this is happening when you're in already. Now when I'm starting, Alex, maybe you can talk a little bit about that. Europe, China, US, are we going to a dividing world?
At least, for example, a clear example when we look at the mobile industry, it's clear, and from the last Mobile World Congress, start to be every time even more clear. 5G, that is going to be the new standard for connectivity, is going to have two standards, the American one and the Chinese one. It's going to be the Huawei 5G standard, and it's going to be the American 5G standard. It means it's not about who is your investor, that I fully agree. It's what type of tech decisions you will need to take at front, under which standards you will start to develop your product and release your business. You can do both, but it's going to be, of course, more expensive and more challenging, or you will need to build, because, for example, UK has already decided that the Chinese 5G standard are going to be the deployment of the 5G in UK. It means if you are a startup in UK, most probably you will start to develop your product for networks on Chinese technology, even there is no Chinese investors. Then there is, I will say, a split, we'll say, into products that will become a new normal, that we will start to see products that will need to run agnostically in the platform, quite difficult, depends on the type of product, or will need to be able to be compatible with these two new walls that are going to be the American tech standards and the Chinese tech standards, that will try to be as less compatible as possible to try to create this, I will say, real digital wall between these two type of powers that are really, really, I will say, fighting nowadays.
Well, yeah, Richard, you want to say something? No? We are talking.
I'm going to continue to bang the optimistic drum and talk about how crypto is going to save the world. So just let me know when it's my turn to
this
say
is because you are half
You're
British,
an
half
entrepreneur.
Australian.
You have to be optimistic.
Yeah, but you remember that this happened before. We had the U.S. standards and the European 3G standards, and now this thing is designed to do both because it's all software. And I think that will happen in the 5G split. But in the central office equipment, that's the big split.
But for example, the European and US, it was an accident. It was not done on purpose. Now there is an intention to get these two standards on place. The incompatibility between US and Europe, it was some sort of an accident, and at the end the industry agreed to go for someone. Now there is no this willingness to merge these two technologies.
Adam.
Well, I didn't actually hear the first question, but because I was
The first
late.
question was, where is Adam?
Where is Adam? That was the question, and that's the question I'm always trying to answer myself. But now I'm here, and I come from the financial market perspective, and I think the interesting thing is that if you look at the recent trend from an IPO perspective in the US, it's very bullish for what is a geographical exposure for a commercial model, which has been proven already in the US. So if you look at the number of Chinese companies that are listing in the US, we've seen an influx which is unparalleled compared to the last years. I mean, last year we had 30 companies. It's the same.
Chinese companies
listing in the US. They have no commercial model in the US.
Just raising money in the stock market.
Just raising money with knowledgeable investors that understand that, listen, this is a similar business model to their peers in the US, but they have a different geographical exposure. And probably they're taking a bet that the Googles and the Facebooks might not be able to penetrate those commercial markets, and that these incumbents will be able to thrive just as well as Facebook and Google has done in their home market, so to speak. And I think that diversification is creating a financial opportunity where you can make a bet in terms of this fragmentation. I'm not justifying it, but the reality is that basically it's creating an opportunity for incumbents to grow. And the reality is also, if you look at Russia, I know the founders of Avito, which is a very significant classified, they've been able to grow quite significantly because of the political issues going on, because no one else has made a bet on Russia because of all the risks that come along with it right now. And the reality is those that are willing to take that bet and to go local and to basically build that ecosystem have an opportunity. But in the long run, I think this trade war and this political war is not beneficial. You're not creating a 1 + 1 = 3 dynamic here. You're creating a dynamic which will have implications. And Richard mentioned one. I mean, Chinese are net sellers now since the last years. And this is not the implication of that they're trying to retaliate. This is also an implication that the trade war is cutting resources for them. And they need to sell to create, to get access to assets. And that's creating a different momentum, which not necessarily Trump was looking to create, but it's a direct implication of that. And then you have other aspects that Africa, which is a very interesting continent, in terms of growth opportunity is, basically the key providers of growth there are China in terms of funding and from an infrastructure point of view, et cetera. So there's a whole different paradigm change in terms of who's driving the growth and who's driving the agenda. And unfortunately, I think, it's not beneficial all the time, but it's a scenario where the financial markets are savvy enough to see where the opportunity is created, and they see beyond these barriers from an investment point of view.
So let's talk about, I know it's a panel, it's talking about technology, let's talk about a little bit about money and how savvy are the markets. And I want to talk about valuations and to talk about IPOs and to talk about, and we are talking about big politics, so let's say look from above about what's going on in the world. And again, valuations are just rising up. We see IPOs like, of course, WeWork, Lyft, Uber. There's lots of imagination, if we'll be modest here, lots of imagination between multiples and evaluation, and we saw what happened to the valuation of WeWork. Do you think, well, we'll start with you, and then we'll go to Shukat. You are the youngest guy. You are the entrepreneur from Yahoo, and we'll talk with you about it. Do you think we are facing a new evaluation era, where evaluation, when you start, because all the businesses going for 30 multiple, 50 multiple, 100 multiple, but the public markets are not paying it?
Well, I think the two worlds are not independent of each other, so they're correlated. And the other aspect is, the Fed yesterday lowered the interest rates again. That means that there's a lot of money out there looking for a return of investment. And having your money in the bank account is not giving you any return, on the contrary. So I think there's a lot of investors out there looking for growth. What has created a new dynamic in the last 10 years is the growth of the private markets and the access to capital in the private markets. Typically, an IPO would have been done, if I remind you of, the Apple IPO, which was a $50 million IPO. Those IPOs are not done anymore because those IPOs are done in the private markets. In the sense you get access to that kind of capital in the private markets, much more capital. The problem is in the private market is that it's us making a price according to certain terms. If you open up that club and involve everyone here, it's not sure that we would agree on the same price here. So you can sit there and value according to peers and the opportunity and the growth and the access to that opportunity, but making the transition from the private environment when the company decides to do so, because eventually the public markets creates a value for a company in terms of liquidity, access to different funding resources. There's something that the private market in many cases cannot provide. And this is being created much later than we were typically used to. So, nowadays you have companies doing, KLMNOP rounds. Before we were talking about CD rounds maybe, And the transition from private to public is a very delicate process. It's very easy to point fingers now at companies that are having extreme difficulties in managing that transition. But there have been a number of successes that have been downsized from the last round, entered into the public markets, and have outperformed. So one has to keep in mind...
So there's just one way up?
No, it's not just one way up. But I think what we have to keep in mind that the IPO comes much later now than it did before for 10 companies, but it's not the end game. I would have loved to have bought Apple shares when they had a slump back in the 90s, and look at where they're now. It's very difficult with the whole fundamental game change that's happening that we are very short-sighted in terms of where the evolution is going.
Shaukat,
that's my reflection.
When you hear Adam, you also have a startup now, but you also have a background in investment, and it's not your first startup. If you need money, where do you go to? And what will be the evaluation you will think about in your business? And maybe tell a little bit about your company now and then.
If I'm looking for money, I will go where there are a lot of money. If I'm looking for money, I will go to people who's going to give me money at my terms. If I'm looking for money, I will not have biases that are unreal. So companies, if you're a startup company, I think this notion of I am going to look for money and I'm not going to pick him and I'm going to pick that are bogus. I think if you're a startup company, you're assuming on this that you have 100 options and you're going to pick 2. Actually, never that case. You are picking options that are probably 2 and you need 3. So let's be real about that. Second thing, I think this nationalistic thing that we talk about is also like fantasy world, which is companies really don't look, at least the startup companies, when they're not IBMs or, actually IBM is a bad example probably these days, when they're larger companies, they don't look at opportunities as a nationalistic approach. Means they don't say, there is a huge opportunity for my business, but you know, I'm nationalistic, so I'm not going to do that. Those companies usually don't last. Companies need to look at what the opportunity is, and usually they are global. They have been global for the last 20 years. It will not change. Financial markets also don't look at, you know, these companies they are like, you know, like you are saying, I would have loved to invest in Apple. Actually, it doesn't matter what the name of the company is. It could be XYZ, and you would have loved to invest in companies that would give you 1,000x return. It is very easy to go back and say, you know, I would have loved to do XYZ, but the question is, why didn't you then? The point on this one is financial market also really do not look at, like, if this company is doing business XYZ, and hence, you know, I'm not going to invest in it. They are looking at what is a good business, what will give me best returns. The reason Chinese companies are listed in US is like, you know, there are companies from all over the world listing in US. They happen to be great companies. They happen to have great businesses. So of course they will list in the biggest public market in the world that's most liquid. There's no, like...
WeWork is a good business?
I think WeWork is a fantastic business going to be. I think it is absolutely wrong to look at a company in a particular time frame and say whether it's a good business or not, or what the company is today. I'll give you an example of it. In 1998...
I sharp my question. Is it 100-time multiple or 200-time multiple on EBITDA business?
Oh, but
I have no idea of that one. These guys are a lot more expert than I am on this one.
No, but I just to jump in, I think you said something very important, is that the ability to take in money according to your terms is very key here. When you're taking in the kind of money that many of these late-stage companies are coming with, they're coming in with very structured terms like preferential shares, which dilute, you know, and cover. They come with an insurance of valuation. So you're indirectly inflating the valuation. So it's a very complex structure that you're creating in the private markets, and transitioning that into the public markets is not easy, because the public markets is as democratic as you can get at the end of the day. It's mostly common shares, and etc. The issue here is WeWork a great business? It's a fantastic business. Is it value at that price, or which price? I don't know. The market will give it the right price. You know, and the question is, you know, you would have entrepreneurs that will say, I'm undervalued, but over time, you will have to sort of meet the, you know, build that dialogue.
Look, I think the two things are happening. One is there is, as Adam said, in an era where where you don't earn 5% from a bank or 6% or 10%, but you have negative interest rates in parts of Europe, and maybe at best in the US you get 2%. People want more yield than that. And the only place to get that is equity. Now, the question of what kind of equity, we have half the number of public companies today that we had 10 years ago. We went from sort of 7,500 to 3,500. So the money is going later stage private, SoftBank being obviously the biggest example of this. And because there's too much money, the oversupply of capital, they tend to overpay, unquote. But remember, when two people make when there's a trade on the stock market, there's a buyer and a seller. And people say it's a zero-sum game. But if the buyer is buying with a 20-year horizon, and the seller is an algorithm with a 10 microsecond horizon. They may both win. The stock may go down in 10 microseconds and up in 20 years, and they both win. SoftBank has a very long horizon. So are they setting the right price for WeWork today? No, because they don't care. They care what it's going to be in 20 years, and they believe that in 20 years, the business model they've created will succeed. And I think they may be right at that. I do think it's outrageously overvalued today. But look at Facebook. Facebook went public had all the private trading, went public at 38 and dropped to 19. Would you have said that was a terrible IPO? The people bought in at 38, and if the people held on from 19, it's now 200 or 190 or whatever it is today. 10x from that point. So timing is very important, and I think SoftBank's view of this is so different than the rest of the world that they don't really care.
Can I share a story that was like really interesting? I think in 1998, how many of you remember the Henry Blodgett prediction? So for all the people who don't know what it is, big analyst Henry Blodgett get two predictions, one for Amazon, one for Yahoo. He predicted Amazon stock to go up by 100, Yahoo stock to go up by 90. And next day, Amazon stock went up by 100 plus, we went up by 95. And people were like, whoa, what happened? Henry says, wait, I didn't say tomorrow, I said in a year. So, the point on this one is, it is the market decides what the value of the future is. All these people, what we are doing are an indicator of confidence to market, and people take it any which way they want to. What those guys write to invest at Amazon that went up by 100 at that time, or Yahoo at that time, absolutely. Look at what they are right now.
I was just going to say that, I agree, don't disagree with all the discussion, and I think it's important maybe to reflect on the question of capital markets at this late stage, but to be frank, I'm not sure that's the major driver of growth for the economy, is focusing on this late stage question. I mean, it's part of the life cycle for sure. I think what we want to sort of come back to is perhaps is the question of where Europe is currently and how it can be competitive at the other end of the life cycle, excuse me, at the beginning of the inception point of new startups. And on that point, looking beyond the question of nation states, and in fact looking beyond perhaps the question of income inequality and populism, which is a very real question I just want to acknowledge, and we can get into a whole discussion about ways in which that can be tackled politically and economically. Quick question, Europe versus America, which region has more software developers in it? Any answers? Europe. Another question, which area produces more STEM PhD graduates per year, the US or Europe? Europe, twice as many. Twice as many. Creativity comes when you sleep sometimes as well. It's very important. I think there's a bit of a productivity myth attached to that. I just want to say that there's a lot of activity that transcends nation states by incredibly talented people across Europe creating new companies that gives me cause for optimism. And that's kind of at least my regional perspective. And what the capital markets do at the end of the life cycle, I'm not saying I don't care. I'm just saying
Listen,
there's a lot of speculation.
I think there's only one person that measures the success of the economy by how the index is going, and that's Trump. So I'm not sure. I think from our perspective as an exchange, we want to be a part of the ecosystem for any company, whether it's a growth company or any company. So I think this time is a fantastic time in history where there's more capital available for late-stage companies, early-stage companies, and so on. US is unrivaled. It's not perfect, but it's unrivaled right now. The pockets are so deep in terms of expertise and so on. Europe has to catch up. Macron did an interesting launch yesterday where he launched a new platform for startups and late-stage companies, committing a lot of money, committing a lot of commitment. Very nationalistic. How do you invest in French companies? How do you, Europe is still focused on solving its own pools of
I
liquidity.
think I want to
you
go
know?
further with this Europe-US thing and talk about some models. We see more and more, let's say, eager for B2B companies in Europe, what we didn't saw before. We are in Israel, we have mainly, and if I can talk about it in a minute, mainly investment in B2B company. Alex, can you tell us a little bit, how do you see this business?
Sure. Just a few thoughts. I mean, there is something about the IPOs, just going back to the IPOs, that I think is food for thought, that is at the late stage, at the growth stage, the average time to IPO has even doubled in the last 10, 15 years. That means that all the VC industry needs to readjust at the new time scale. If they don't readjust to the new time scale, valuations on the private markets, when they reach public, as we have seen so far, they have suffered a big readjustment. Too much time with an abundance of money in the private markets looks like are getting the valuations of companies to a point that when they plug into public markets and the way public markets are doing valuations, there is a big gap. And we see that with the Slack, with companies that we can see they are more SaaS, more robust, with more recurrent revenue. Maybe we will see at the moment that WeWork will do the IPO. WeWork is I have a comment on WeWork. Is co-working a good business? Yes. Is the WeWork co-working business the right one? Question mark.
But we know that most companies don't exit with IPO. As a venture capitalist, 90% of the exits are not IPO.
Yeah.
And so, you know, the world focuses on the IPOs, but as a venture capitalist, I don't focus on the IPOs. I focus on building great relations with the big companies that are going to buy my companies that I invest in.
So let's talk about the model. Do you think B2B model becoming more popular and well, with more opportunities?
Yeah, here in Israel, you are used to the B2B. It's the standard, I will say, most probably for almost all the startups, mainly. Europe has been a little bit different. Europe has been really intense on the B2C space, mobile, marketplaces, social apps. We have tried to develop an ecosystem so far where we see has been really used to the B2C model and the returns expected. We see, I think, a willingness every time more and more on the B2C industry in Europe for the B2B appetite, especially with SaaS companies, because a lot of things needs to be done to digitalize Europe industry, especially SMEs. SMEs will not be able to digitalize by themselves. 99% of companies in Europe are SMEs. They represent 60% of the GDP of the entire Europe. It's a huge opportunity, and SMEs by default will not hire engineers to develop their own software solutions. They cannot. They will not even be possible because they will not have the attractiveness and the money to hire good engineers in the short term. Then SaaS, distribution of SaaS for SMEs. We can learn and leverage a lot of what we have learned from the B2C industry, creating growth, at the same time that we link that growth curves with a really smart sales strategy. We saw that every time more and more, like companies with Slack, Monday, where you create some sort of a user that engage, and when the companies are really, companies, I say employees, are using the product, then when you have a massive adoption in the company, it's the right time to move to sales and go to the company and look for a corporate deal. And this, I think, is a new way to, at least in Europe, maybe in Israel it's common before, but at least in Europe we start to see a mainstream of good entrepreneurs, talent, be pumped more in this type of new way to build value in companies.
I think maybe if we can bifurcate sort of the B2B and B2C, Israel, it's not surprising that Israel was excelling at B2B because we're not close to any market. In order to do B2C, essentially I think it's usually a disruptive business. You have to understand the local environment and then to think how people are going to behave differently. For Israelis who are, the closest market is Europe, few hours, it's very far in terms of the culture. It's very tough for an Israeli to figure out how to disrupt a way somebody would consume something, okay? As opposed to B2B where probably all businesses are created equal. They all suffer from the same issues of productivity, digital transformation, cyber, whatever you name it, you know, different generations had different issues. And so traditionally, Israelis were focused on B2B. It's more of a evolution as opposed to a revolution. I think the first time we faced a real B2C success was Waze. And it was very quick until Waze have created a new generation of entrepreneurs who were taking the risk of actually trying to do B2C out of the Middle East, because it really isn't easy. It's also not easy because a lot of the talent is not necessarily an engineering talent where we have abundance of here. It's rather sales, marketing. It's a different flavor, which has to be very local in the target market that you're looking into. So overall, I think it's a very obvious trend. I'm happy for Europe for moving to B2B, because I think a market, and we'll talk about cycles in a minute, but a market needs both the aggressive disruptors, but also those who will sell something that makes businesses better, and they're going to sustain situations of tough markets. Now, you said he's the youngest, and you're probably right, because I remember a few times of bad markets, and it was very, very clear. I don't know the term in English, when the tides go back or whatever, you can see who's naked, right? So those companies who have the business economics or the unit economics are real. They usually survive down cycles. I don't want to say easily, but they survive it. I remember 2008, companies who sold to B2B, even those who sold to financial institutions who were in dire straits and almost didn't buy anything in terms of new products, they did not suffer as much as those who needed tons of money in marketing and other things, where the companies were not making money, even on the the sort of unit economic level. And I think for a nation, you want to have a good mix of all types.
Do you
Can
think?
I add one thing? Just
You're
to
not
yours?
younger than me?
No, you are younger.
The first time Israel had a big exit is not Waze, it is ICQ. And if you look at ICQ, Waze, and Mobile Iron, that they
I
are
hope
happen
Yossi
to be
didn't catch my
B2C.
mistake. I'm sorry.
But I think also we know that 10 years ago, all the unicorns came out of the U.S. and out of Silicon Valley. And now 20% of unicorns come from Silicon Valley. More than 50% come from outside the U.S. So we are seeing that. Look at Zoom, as another example of something that grew as a B2B and had that growth. I do think it's not just Europe, but India, which is a giant engine as well. Because India has the rule of law, a common language, and digitalization is key. And so we've done things in India in transportation, in financial things like Square, things for SMB, exactly the right place to go in a place like India. I think there's huge abilities to make profits in those things.
Do you think, if Richard will be with you in a moment, do you think well, Israeli startup scene was B2B and US. We were like a part of US, and we were dreaming about the US, opening the second or the first office or the second employee were in New York or San Francisco. Do you think we're talking here about a lot of new eras ahead of us for Israeli companies facing more Europe, because Europe's starting to be a B2B hub?
Not as much, I think, because the US is huge and it's all the same. So when you go to sell in America, you can have an office in New York, Atlanta, whatever. You're facing a very similar market. Europe is not one market, I think. It's very specific. And I think it also depends on what you sell. If it's a B2C, it's one thing. If most companies, and I agree with you, if you want to be worth a lot of money, you want to have businesses coming from various places around the world. That, by the way, balances the risk of all of a sudden trade wars or whatever, so you're hedged. I think, but eventually though, because a lot of VCs from the US are investing in Israeli companies, many of the entrepreneurs try to look like and actually become very Americanized. The way we structure the deals, the way the paperworks look like, the way the term sheets look like, the way the board meetings look like. It's a very American type companies, because at the end of the day, when we want to get Silicon Valley to invest, they have to come in and feel American. And then when we want to go public, the investment banks, they have some sort of thing that they expect from us to be. They may have a different view in an Indian-originated company, but Israelis, if we're not looking like something that they understand, it's a risk, and it may, downgrade the company. So I think the U.S., just because it happened to be that way for 20 years, we sort of like the 50 whatever second state. It helps us dramatically, by the way, because we are able to get money that is, from probably the best place in the world. But I said also before, we got money from China. We actually managed to do some business in China. It was a very tough process, but we have that. And then in Europe, I think most aggressive companies in Europe were B2B, because then, again, it's not a geography-oriented solution. It was clean tech, because Europe is very hot on clean tech, and so eventually, if there is a market that wants to grab you, you get attached to them.
Just to another dimension of this is the whole data aspect in terms of access to data, how you manage data. It's much more harmonized and manageable in the U.S. in terms of the philosophy and how the companies perceive, work with this. So to be able to scale in the U.S., it's not only about opening offices, it's also how you reach the business and how you scale from a regulatory point of view. The whole aspect in terms of becoming an American company, I think one of the key issues that we face when we talk about the financial markets is that we talk about the IPO only about the valuations. But one of the key drivers when it comes to B2B is many of the Israeli companies that come to the US, they're not only looking for the liquidity, they're not only looking for the valuation, they're looking for the visibility and the credibility to increase their commercial awareness and their presence, to attract people, to buy other assets, to diversify their growth model, because ultimately they're trying to grow their business. And I think this gives them one more platform to really access, and that's where US is unrivaled. If you list in London or something, you're not really creating that presence, you're not creating that dynamic. We're still too fragmented in Europe. We still have a long way to go to create an open framework for B2B or any company to really access the European landscape and scale in that efficient way. And at the end of the day, you're right. Investors, whether you're, it has nothing to do with Israel. US is bullish about Israel, understands Israel. But if you are a non-US company, they're expecting you to act more as a US company to to make sure that the investors feel more comfortable. And you're comparing yourselves on a commercial basis, but not with a different flavor kind of thing.
So if I may, I think this myth of looking like somebody will get you money is a serious myth. We should get over it. None of the companies got funded, you can tell better, because they look like something else. They got funded because they're good businesses. They are funded, they have good stuff that investors saw, like this is worth doing. And I have to leave with this with you. I love you, but you said about PhDs. PhDs don't make companies, entrepreneurs do. So US will have more entrepreneurs, probably followed by Israel here. And those are the crazy guys who would say, you know what, I don't care about terminologies. It could be B2B, B2C, C2A, doesn't matter. I'm going to create great businesses. I'm going to build it on in the face of everybody laughing at me. And those are the foolish guys will make countries great. Israel has a lot of them. Kudos to you.
Yeah,
I think
we'll clap for creativity and going
for
against
more crazy in Europe. Yeah, no, Israel does definitely. Although, I think Europe is getting there. But picking up on a previous point, some of the crazy gets, and I couldn't agree more. Of course, you don't just need PhDs, although a lot of great PhDs in Israel also. You don't just need those in order to create great companies. You've got to have that bit of crazy, for sure. You also sometimes need the catalyst. And the downturn we had, the crisis in 2008, was a big catalyst I saw for that in Europe. People said, I'm not going to work for a bank anymore. In fact, I don't have a job in a bank anymore. I'm going to start building a startup down in Barcelona. I'm going to do something fresh. I'm going to do something new. And I think that's in that Web 2 wave of innovation. That's been great. So maybe we want to look forward to that next cataclysm that could be on the horizon in terms of valuations. I don't know. That's possibly the way. And I couldn't agree more also about your statement actually about I don't care what acronym you apply to it. There are some niceties as to where it's easier to build a B2B versus B2C. For my sins, I've been mostly in B2B. I've been trying to get out of that for many decades because it makes for the most terrible cocktail conversations. It's much easier if you've built a consumer-facing product and then you can tell them about it.
I think it's interesting, I'm based in Stockholm because Nasdaq acquired the Nordic exchanges and I travel around in Europe. But the success that we've seen in Finland and Stockholm in terms of the gaming community in Finland and the ICT and tech world has come from the failures of Ericsson's and Nokia, So without, if you look at Supercell, they took over the Nokia research and development tower. They were all working at Nokia in the days. So I think I agree with you. With every failure comes a success and a dynamic environment where we're forcing people to act and engage. And there's a lot of knowledge that needs to kick out. And I think that's the big difference in the US. You're allowed to fail. Failure is accepted in a much more dynamic. I think Europe is improving, but needs to improve. And I think Israel is way ahead in many other European.
Israel is a successful failure.
Yeah, exactly.
We're going up from failure to failure.
Exactly. Each failure creates more success. Now I'm joking, but you accept it and you move on, and it's part of the game. Whilst Europe is more conservative.
I have to agree with that failure in Europe and failure in Asia means you're out of the game for 5 or 10 years, whereas failure in Israel or the U.S. means you go right back in. But also success does the same. So when Waze is successful or Mobileye is successful, you get people who now have some money and they leave those companies after a year and start doing their own. So it's failure, yes, does and acceptance of it is very critical to America and Israeli success, but so is success, because that also breeds.
Absolutely.
When Google went public, hundreds of companies got started. Facebook, the same thing, and we'll see the same thing now, some coming out of Slack, some coming out of Snapchat, so on.
We see that here, we see that in Spotify, in Sweden. It's not only money that's being made accessible, it's also the knowledge of building companies.
Yes.
And so it's a dynamic where angel investment from the core is really being built, which is something missing in Europe.
Israelis have this thing that I actually got big fond of, that you guys use it all the time. They use this thing called, why not? And man, I'm telling you, I come from Silicon Valley. And we have a lot to learn from you guys, because this attitude of why not, it's gonna drive things that are seemingly impossible. I mean, look at what it has built from a middle of a conflict zone, of middle of a desert, because of that thing. Why not? Which is fascinating to me.
You need to stay more to understand. Thank you. I think we're running out of time, but we're talking about failure and success, and I have 3 issues that I want to talk about regarding failure and success. So I'll tell them, and what we have the time to talk about, we will talk. We talk about failure and success. I want to talk a little bit about the blockchain. I want to talk a little bit about Yahoo and what happened there. And I also, if we have time, I want to talk about the failure of diversity in the tech business, how it becomes that we are here, 6 people, just 1 lady, and how we don't have so many women CEOs or diversity in this business. But we'll start with blockchain. It's less complicated than women, please.
Great.
I can start.
This is let's do blockchain is less complicated than women. That's a really cracking intro.
It's a men point of view. Sorry. I was talking about my wife, just my wife.
I think it's always important to be humble and say I probably don't understand either of those topics, but I'll do my best and talk a little bit about kind of blockchain from our perspective. I mean, just starting, who here in the room thinks that blockchain and crypto is effectively just a scam, and it's been and done, and it's over. It's cooked. Put up your hand. Go on, be brave. A couple of people.
It's,
So there's
it's a bullish room, you know.
It's a very bullish room. I'm gonna have to learn how to keep my voice working. So look, just in brief from our perspective, in the kind of the vision I gave earlier of these kind of new services interwoven with our lives, we see a kind of this sandwich made up of, on the one side, algorithms, on the other side, this highly pervasive hardware layer, just everywhere, everything connected. And in the middle is the kind of crypto jam, and that is all about, it's the thing that completes the sandwich. And what it's delivering to us is a security that we have never seen before, a level of security, a level of privacy that we've never seen before. We can be selective about what data we share, and a different notion of trust, that we can trust interactions between women, men, and machines in a way that we couldn't before. And so we think that's going to be incredibly powerful. And we actually think, to try and connect it back to some of the previous conversations, and maybe this will be catalyzed by a downturn economically, that there's going to be some root shocks to the capital markets, ultimately. I was quoted by an FT journalist a little while ago saying that I thought the crypto capital markets would ultimately consume today's capital markets because their perceived weaknesses are actually their strengths. We can go into more detail what I mean by that. And also, I think governments are going to get a big shock. We just saw in this last week or so the objection of both Germany and France to the development of Libra. So I think they're getting shocked by the potential of Libra to become a transnational, essentially certainly payments rails, possibly reserve currency, and they're getting nervous about that. And actually, one of the sort of ironic effects of the discussion around Libra and the dominance that indeed Facebook may have in that little ecosystem is that people are waking up to the benefits of more decentralized cryptocurrencies like Bitcoin and perhaps like Ethereum, if you believe that can be money. And these are not small movements. A shift away from the dollar as the world's reserve currency could perhaps have some impact on the other topics you were talking about, like the trade wars.
I think, just to jump in, sorry, from a NASDAQ financial market perspective, blockchain is here to stay. It's a technology, and we're looking at it, we're using it. We provide technology to 150 marketplaces. We have more and more. Theoretically, eBay could come to us today and buy our technology because it's a marketplace, and that's what we're looking at how to provide. And we're looking at how to integrate blockchain. So blockchain is one aspect. It's a very efficient infrastructure. It's a bit comparable. If we would build a city today, we would definitely build it for non-driving vehicles, or sort of, for much more seamless than having the infrastructure we have today. So integrating new blockchain technology is very complex. Crypto is an issue which I think, like many other regulators, they've allowed SME funding to grow in a way which has been sort of monitored but not intervened. When Libra shows up, it's almost sudden, the regulators will really scrutinize it, because you're almost, if you're measuring inflation, because you're quantifying all the different assets out there that can drive inflation, if all of a sudden you're creating a new asset that can drive inflation, that's going to be very scrutinized by regulators and central banks, especially with the power that Facebook has in terms of leverage. So I think it has a potential. We thought it would be a currency. It became an asset, and it's valued as an asset. Whether you invest in Bitcoin because rather than oil or gold or whatever it is, I think Bitcoin has the potential, but it's going to a long way before it's going to become a common methodology for us to
use.
What has a real potential, however, is diversity.
Alex was starting. Sorry.
Sorry, just a little bit of a thought for provoking. I mean, the biggest problem of blockchain technology has been Bitcoin. Because Bitcoin has taken blockchain technology to a discussion for mass media and for people that it was too early from the maturity of the technology that is backing. It's like start to understand how powerful blockchain can be at the moment that will be embedded into the internet, explaining internet through a collection of protocols to people nobody will be able to really realize how much value will be created from this new internet, embedding, I will say, trust into the internet as we understand it today. That became some of a mainstream discussion that creates confusion and speculation at the end through crypto. Then the question is what to do with crypto, and the other is how powerful, as Adam was pointing out, a decentralized protocol with security. It will bring to the internet again, most probably an internet that is too much centralized nowadays. And with a technology like blockchain, we can bring internet again to the boundaries of the internet, not just at the center. And that will bring again, I will say, something that is missing mostly on the Internet 2.0 that we are living today. And I see that as a really potential for blockchain technologies. Crypto is a question mark for me, is we are ready to offer to people to play with crypto as they understand some sort of a currency of a market. And we are ready to go for that.
We shouldn't run out of time before the diversity question. That's what I want to make sure.
Yeah.
First round in the last 4 years has trained a few hundred women angel investors. We now have about 25% of our founding teams have a woman on the C-suite in the team. It's very critical. Ed Zimmerman, a very famous venture lawyer in New York, will not be on a panel unless half of the participants are women. And he says you just have to find them. They're there, they exist. I have one company I'm an investor in Israel, mind you, is a female CEO. The other one is a male CEO, but they're there. We just have to find them and expose them and bring them out more, and that's something that we just have to do.
To your point, I think it has to come a lot from the investors, and we're seeing it. I mean, the whole topic about ESG, one thing it has a lot to do with sustainability and so on, but it's a lot about governance. We're seeing more and more investors demand that women are represented in management and on boards. So investors, already from a VC point of view, have to start putting that, demand on their companies, diversify,
If I may,
Yeah.
can I have a comment on it? Which of all the women here, who would want to be on the chair on a thing because you're just a woman? Not on
No,
your
it's
skill.
not that.
I
It's
don't
not
think
that.
I have
anybody
to
would want.
admit,
I think
I'm writing and talking about the tech business for, I just look young, more than 20
Yeah,
years, and I never talked about this issue just because what you're saying now, 1 minute. But it's 25 years now, and if we look about, Ifat, you are really, let's talk about your business, the finance business. You're the head of
I
Leumi
want to
Tech.
talk about tech. We have
And,
enough
and
about
now
finance.
just the tech is
No,
not.
first
But
of all, I'm very happy
Yeah.
that I'm the last to speak about the subject and all the men jumped. This is innovative. Never in my life. But I do want to say something which may not be PC, but if we look at entrepreneurs, I believe that entrepreneurs have to be a little bit, a little bit not attached to the ground, which is a good thing, right? They have to be dreamers and those who actually do the math of what is the percentage that I'm actually going to make money on this. If they do the math and they're logical and they're realistic, they're going to go work for Google. Okay, and I used to be an investor for 10 years. If I thought people are very normal, I would never put money in them because they will never make it big. Now, what's the analogy to women? There have been studies about women investing, and it's very clear that women invest in the stock market very differently than men. Men are very impulsive. They jump in and out of the market. They move things around. Women are more long-term, less, jumping around. And at the end of the day, by the way, many of them make more money than men. But it means that we are wired a little bit differently. And I think women have to switch a little bit of their very connected to the ground attitude and be a little more of dreamers to be taking 50% of the leadership position in tech, because I do think that we're a little different. I used to say we're not, but then I grew up. Different in good ways, and I think we're in dire straits. We don't have women in any of the positions in tech. CEOs or founders is not the main issue. I think we need to have software engineers, physicists, whatever, not just marketing. And it takes too long, in my opinion, according, like you're saying, and something needs to be done to expedite the number.
So it's not from the app, it's not from the
No,
investor level, it's from
we
the,
need them
let's say-
every level, all, you know. I'll tell you, I have to tell you a personal story. I was taking my son to high school to orientation. And one of the teachers, by the way, they're all women teachers. Also, the STEM stuff are women teachers. And they were saying, you know, we have some girls in physics too. Now, I was there with my son, but I almost killed that teacher. I'm like, what do you mean we also have women here? Who said, why is it an isse that women need, you know, are not typically going to do physics? So I think it's everybody's role to not miss or not try to channel different people to different things. By the way, I like to have more, you know, dancers that are men, or marketing people that are men, or secretaries that are men. I think it has to be 50-50 or 51-49, the way we are in society. Thank you.
So, I mean, I'd definitely like to echo. I've got two daughters, and from my perspective, you know, raise girls and boys the same way, given the opportunities. The only thing I will say, and it was picking up on a point that did come earlier, I'm not sure that we should try and dictate outcomes. I don't think we should try and dictate outcomes. We should try and create opportunities, because there are so many factors that go into how people want to choose how they spend their lives and which outcome they actually want to end up in. And so I think dictating outcomes, if there were no role models at all for a girl or a boy to aspire to in every type of role, then sure, maybe you'd want to ensure there's at least one role model, but the main thing I think is creating opportunities, not dictating outcomes.
I agree.
That's my
I
personal
agree
view.
that it should not be dictated. You should stimulate, but you should also think differently. I mean, when I look at the boards and the CEO movements that I see on the exchange. They take one CEO from one exchange, from one company, and they just move it to the other. It's typically the same form. You have to stimulate in the infrastructure within the company and the culture of the company to challenge and to diversify and think differently in terms of how you promote, how you stimulate, and how you populate, you know, your management or your senior or junior management to make them grow. At the end of the day, you can't dictate. But what I'm saying is you can't stimulate. And I think from an investor point of view, you can definitely stimulate.
And you can get paid for it. I think the first round study of 10 years, which you can look up, 10-year first round, show that the companies we invested in that had a woman in the C-suite did 62% better than companies that were just two white guys. So and the Harvard Business School has done some studies about companies with women in senior leadership and on the boards. They have better performance. So this is not something you want to do for altruistic reasons. It's because we're going to get paid for doing it, and we should do much more of it.
Right,
Is there a
we'll
return
be
on
very happy
investment?
to see that our next panel that will discuss how we prepare the next generation to the future